Hi, I'm Max Friar, founder and managing partner of Calder Capital.
I'm Garrett Monroe, sell-side director here at Calder Capital.
This is the first of what we hope to be a series of videos where we share with you a bit of a market update in the mergers and acquisitions realm. We try to dig deep into what sellers and buyers are concerned about and what questions they're asking. We try to give you a bit of a preview into what we think the future holds for the market. We'll give you a little bit of an update in terms of what's going on internally at Calder, and we'll try to leave you with a bit of advice or a tidbit that you might not read on LinkedIn or on social media. So this is going to be an interview format, and I have a couple of questions prepared for Garrett here. We'll see how well he does. So Garrett, GF Data recently reported that middle market deal volume rallied in the first half of 2024. There were 180 deals reported versus 156 during the first half of 2023. And this puts 2024 on pace to surpass both 2022 and 2023 for deal volume, although not dramatically so. And then similarly on the lower end of the market, BizBuySell reported that 2,448 small business transactions occurred in Q2 2024. And that was the most in a quarter since 2019. So we finally kind of bounced back from COVID. And lastly, as of the taping of this interview, our own firm, Calder, we've surpassed our 2023 closings and revenue. So kind of similarly, we seem to be aligned with the market here. So while these numbers are not leaps and bounds above previous years, deal volume is clearly trending higher this year across the lower middle market. I think this is interesting because we've read that seller sentiment has been low for a number of years, and it remains low, although it's recovering. So I'm kind of interested in, despite seller sentiment being low, why are we seeing deal volumes increase, in your opinion?
Yeah, it's interesting. I think a lot of firms, or you hear commentary constantly revolving around interest rates, but interest rates have been high. So the two words that come to mind are burnout and exhaustion. A lot of owners, we've actually had a lot of owners recently where they might be going through their first or maybe second valuation exercise, and a lot of the times it's less focus on valuation dollars or the money that they're ultimately going to be putting in their bank account, and more along the lines of, what am I going to do after I sell my business? Who are the managers in place that are going to help transition the company? So I think burnout and exhaustion and owners that are tired of getting gut punches by different twists and turns that the economy and different factors are throwing at them is really driving the uptick in volume that not just us at Calder are receiving, but other firms across the country.
You've seen a bit of degradation, not across the board, but as a trend, you've seen some degradation in financials. So it makes sense that a lot of these things like hiring costs and inflation are still at least hammering owners from a psyche standpoint, right, and causing them to burn out. So that's interesting. So yeah, that makes a lot of sense. So they're coming to market, not necessarily because everything's wonderful, but because they're burned out.
Yep.
Okay, interesting. So business transactions have remained fairly robust. Looking forward to 2025, I'm interested in your thoughts, but of course I'll give you a little bit of data before I ask you to elaborate more. So according to the Q2 2024 IBBA Market Pulse, this is a quote, business owners are postponing their decisions to go to market. In the lower middle market sector, 26% of sellers and 20% of buyers are delaying until after the November election. So here's something you said recently. You were quoted by BizBuySell stating, I'm expecting 2024 to finish out strong, but I think 2025 will be an uptick in volume of transactions. I'm hearing a lot of stories about burnout and talking with a lot of owners with no exit plan. As long as owners are willing to be realistic, I expect 2025 to be the best volume year yet. Can you talk to the audience more about what you think is driving this? Is it the election being over? Are there other factors at play? What does your crystal ball look like for 2025?
I think we have two different types of sellers right now. I think we have those that are burned out or exhausted. And then I think we have those that are quietly waiting in the weeds and waiting to see the trends of interest rates. And we just heard the recent update from the Fed that they're going to be decreasing interest rates, which I think some of the quality sellers that have been game planning, that have been preparing, are ultimately going to take advantage of those trends here in 2025. So I think the volume will come up because we have an interesting mix of those that are burned out and exhausted that want to get out into the marketplace and sell their business because they're ultimately tired. And then also those that want to take advantage of some of the things that they're seeing in the greater macroeconomic trends, specifically interest rates. And then we can't ignore the election that's coming up. So I think a lot of people, even though they don't want to always admit it, I think the election creates a lot of emotion. It creates a lot of indecision for a lot of people. And once we hear those results, regardless of which side it lands on, I think that's also going to spur a lot of activity come end of Q4 into Q1 as well.
So regarding the election, you think it's more just general uncertainty versus
Yes.
policy decisions that flow from the results? Okay, interesting. I tend to agree with you. So you noted in your quote with Biz Buy Sell that owners being realistic is important. So you deliver a lot of valuations. You work with a lot of owners before they make that decision to sell. What does being realistic mean? And do you have any concerns right now or advice that you'd give to owners?
I think a lot of business owners make their decisions based on what they're seeing internally or feeling within their own business. And they don't take a step back to realize there's a lot of different parties that are involved in this transaction. You have lenders, you have attorneys, you have CPAs, and most importantly, you have buyers. And the being realistic isn't necessarily, hey, let's not prioritize your top three goals within this transaction process. I think it's relying on those that are doing deals every single day, like a Calder Capital, like other M&A firms, and understanding what is typical on the marketplace. What is a typical timeline to get a transaction done in a healthy way where you're not taking a discount on valuation and you're achieving a healthy deal structure? For us, that's going to be somewhere in the 7 to 10 month range we would consider as a typical transaction. So it's setting realistic expectations on timelines, deal structure, and make sure that even those that are feeling the burnout and are feeling exhausted within their business, that they also have a successful transaction. Now, it's harder to achieve good results when there's not a year or two of planning or you don't have the right advisors inside of the room with these business owners. But if we're able to set realistic expectations up front with some of these owners, I think it's going to be a successful transaction overall.
Talk briefly about valuation, how we start a process, and what's important in that respect for owners to understand.
Yeah, I think that the valuation process that we conduct, first off, it's more of a discovery of how do we get to know the business? How do we understand what the owner is experiencing in their company? What is the trends that the business has seen since COVID, which sometimes what we're seeing is there's a lot of artificial trends, and then there's legitimate trends that we're seeing inside of the company as well that we want to pay attention to and ultimately understand, make sure buyers understand it when we're pitching the company out in the marketplace too. So I think the valuation is important to help business owners understand what they can retire on. What does a typical deal structure look out in the market? What are the buyers out there that could potentially purchase this business? But it also helps us identify things that we might be able to bring to the table and advise on to make sure that the company can be as marketable as possible when we ultimately launch to market.
And this is a bit of a plug for Calder here, but also other M&A firms. How do you feel about who should prepare the valuation and why?
Yeah, there's a lot of people out there that do valuation. There's third-party valuation firms. There's CPAs. I think ultimately the group or the firm that should be conducting the valuation should be those that are ultimately feeling the pulse in the marketplace and are going to be dealing with buyers on a day-by-day basis. A company is worth as much as a buyer is willing to pay for it. And we're feeling that every single day on the marketplace. And I think it's also important to feel that reaction from buyers as some of these things are being announced in the world, like the interest rate drops, as the election approaches, as we go into a new year like 2025. So I think we're going to be the first to be able to inject some of those things that we're feeling in the market into our valuations versus other valuation providers.
Thank you. So why don't we pivot here to a bit of a Calder update? So yeah. You have some statistics that you'd like to share just in terms of what Calder's done on the market this year, and I'll let you share those.
Yeah, I think it is important to provide statistics backing, because I think a lot of people understand that Calder is a growing firm. We want to continue to grow as a firm. We want to continue to get our services out there and help business owners, but we are having a great year. And I think one of the biggest statistics supporting our good performance year to date is the amount of valuations that we delivered. We talked about why it's important to get valuations. So far through the year, we've delivered 102 valuations to different business owners. We've signed on 41 business owners that have either launched to market so far this year or are going to launch to market in 2025, which is exciting. We've closed 34 deals this year, which is good. And hopefully we're on pace to eclipse our total closed deals for last year. And then we have 29 LOIs that are currently executed. So looking forward to getting those LOIs across the finish line.
And just briefly on that note, what kind of momentum are you feeling right now?
I think it's strong. Our team, we've got the right sell side infrastructure in place. So our team's growing, which is exciting. So as we sign on new clients, we're going to continue to deliver accurate valuations, but also do them in an efficient manner so that way our business owners can plan appropriately. And we're also continuing to invest in technology and think about different ways to help support our business owners out in the marketplace, as well as develop relationships with those that are here in Grand Rapids and in West Michigan, in the greater Midwest, and ultimately nationally as well. So it's exciting times.
Thank you. All right, so I have one final big question for you. If you were to look back at all of the sell-side clients that we have helped transact in 2024, what has been the largest challenge, generally speaking, to getting that transaction across the finish line? And how would you take that to give advice to business owners thinking about selling today?
It's a good question. There's a lot of things that come up in the deal process. And if I could speak to owners here during this interview, financial quality continues to be a huge topic. Not just that we're seeing buyers talk about it, CPAs talk about it, attorneys talk about it, lenders especially are talking about it. As interest rates are fluid and continue to change, lenders want to be able to rely on the financials that we're putting forward to buyers as well as lenders, but we're only as good as the financials that our clients are putting forward and the CPAs are helping them put forward. So even though your CPA that you've had for 20, 30 years might think that you've got rock star financials, it's important to make sure that we do our own analysis. And hey, you might need reviewed financials before you go to market. You might want to consider some type of quality of earnings analysis to make sure that your financials are bulletproof. And why is that important? Because when you get a buyer that submits an offer and you have a lender that looks at a deal, the worst case scenario is that you're 20, 15, 10 days before closing, and there is a surprise that comes out in your financials because the lender or the buyer found a misreporting of a certain line item. There was a misaccrual on your financial statements. So we want to make sure that not just you feel good about your financials or us, that the buyers and all of their third parties feel very good about your financials.
That's a good answer. If you think about it, if one mistake is found, it kind of breaks trust and it throws the entire set of financials into question.
Yeah.
Right? So very important. Well, thank you, Garrett, for being part of this interview. And thanks to everybody that tuned in and listened. And we'll talk to you next month. Thank you.